A very happy new year to our viewers of the Outlook Money webinar series. This is a part of the investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund in association with Outlook Money. I'm Nidhi Sinha, editor Outlook Money, and today our topic of discussion is reflections on 2022 and resolutions for 2023. For this panel discussion, I would like to introduce to you two experts. Mr. K.S. Rao is the head of investor education and distribution development of Aditya Birla Sun Life AMC. Mr. Rao intends to take financial literacy and investor education to various demographic segments across geographies to inculcate the savings habit. He has spent about 2 decades in the mutual funds industry while doing so. We also have with us Mr. Amit Trivedi, who is an author, speaker, blogger, and trainer with over 26 years of experience in the capital markets. He's authored a number of books as well on financial literacy and all things personal finance. So welcome, gentlemen, to this show and a very happy new year to you guys.
Thank you so much.
So as the new year kicks in, this is an apt time to reflect on the year gone by and make some resolutions for 2023. So the year 2022, if we look back at the year 2022, it was very eventful. The year started with Omicron infections, which kind of reached a peak in January 2022. But then as people showed signs of resilience, it didn't really convert into a new life-threatening COVID wave that we had seen in the past couple of years. So in fact, even the latest threat that started in China has failed to unnerve people to that extent. But then there were other challenges that bothered investors and markets alike through the year. To start with, the Russia-Ukraine war in early last year, to back-to-back interest rate hikes by the US Fed and the RBI at home. And now the year has kind of ended with a looming threat of global recession that people are saying might hit us. So as a result, Indian markets, remain volatile through the year. So with that context in mind, let us, reflect on 2022 first before, coming to the resolutions for 2023. So I'll ask this to both you gentlemen, and we can start with Mr. Rao, that what are the key learnings according to you from a year such as 2022, which had so many things in its wake? So how do we remember 2022 in a nutshell?
Yeah, thanks, Nidhi, and good morning and very happy new year to all. And great to be with you and Amit here and to start the new year on the reflection of what went last year and what can go forward. And it's a time to recall and relook at. And as you rightly put it, I think 2022 in a nutshell, it's a year of heightened volatility and of course, heightened uncertainty. Whenever I think of such markets, I remember a book written by Amit on this particular piece. How it's a roller coaster and it's a truly roller coaster. It's sometimes you have a the market was looking bullish, then bearish, and fortunately global markets though didn't do well, and Indian markets have done reasonably well. And at least though we would have underperformed, but we are better. Our performance is much better than global performance. If you would have given little over 4.5% return and that way. And I could see a lot of enthusiasm in the retail space, and that's where we look at the SIP book of the mutual funds really gone up during the year, and year was ended with a very bright note of 13,000 crores of SIP month on month, and the AUM was little over 6.75 lakh crores as an outstanding AUM from the SIP book. That gives a lot of consolidation. But if you want to reflect this year how it is like when Amit is around, I always think of Bollywood. It is a Kabhi Kushi Kabhi Gum, and that's a year of Kabhi Kushi Kabhi Gum. And the lesson what we can learn is world can change any point of time, and one need to be on the course of what you intend to do. Because if I went to my employer that I say buy in January, and probably my employer would have said buy to me in December. Means be humble even in your approach to work or in your approach to the investments. And this is what I broadly look at.
That was very nicely put, Mr. Rao. And in fact, that is a very important point that you raised, that the SIP, the number of SIPs jumped this year. And that was kind of, in a way, during COVID, that we saw a record number of demat accounts opening. Maybe it was a continuation of that thing. And 2022 was definitely, a step ahead from what investors did in 2020 and 2021. Your thoughts, Mr. Trivedi?
I think Mr. Rao, put it beautifully well when he said "Kabhi khushi, kabhi gum." I'll just take it forward from there. A lot of times people know that there is kabhi khushi, kabhi gum, but during the gum time, they are actually looking forward to the khushi time. But in khushi time, we tend to forget that there will be gum sometime later. So this too shall pass. That lesson is remembered in bad times and not in good times. And I'm not really, trying to predict a doom. It's really what keeps you humble and always, looking for protecting the downside while at the same time looking for opportunities on the up. I think that's where the life should be positioned, and that's where the portfolio should be positioned. Or personal finances should be organized in that manner, because first of all, you like you explained in the beginning, there was an Omicron threat in the beginning of the year, but it did not turn out as severe as the fear was around at that point in time. But at the same time, nobody in the wildest thoughts could have predicted a Russia-Ukraine war. And it happened. When it happened, it felt like it should be over soon. And it's still, ongoing, and we don't know what would happen, how long it will prolong the unfortunate event, but it continues on and on. And the third big event that took place in 2022 was the inflation in Western countries soaring through the roof. US inflation went to 40 years back levels, 1980s levels. I mean, in the wildest dreams, once again, nobody would have imagined a developed country seeing double-digit inflation, and it happened. Now, in that case, I'm just repeating some of the lessons we've discussed earlier on various shows. Can you really predict? If anybody has the faintest of hope that I can predict, 2022 was yet another reminder that, sorry, you can't. And then the next question is, what when you can't predict? If you can't predict, you've got to prepare. And that preparation is about protection against downside and encashing the opportunity, which means you've got to take some risk in the portfolio and you've got to protect your portfolio from some of the risks. That is what edge of asset allocation, which we discussed last time, is all about.
True. So to continue the same thought, like people were so resilient during COVID. So there has to be, markets are always kind of, there is some factor or the other that is playing out in the markets. So what is of course, you've talked about asset allocation, but even otherwise, what is it that can make investors resilient to these kind of movements and uncertainties?
Yeah, I think, Nidhi, I'll take it again, from Amit's turn. I mean, when he said edge of asset allocation, right? Edge, what you can look at. And what is you put it, the term is truly a resilience. And resilience has come, if I can look at in the past bear markets and past bull markets, investors were coming at one go and leaving at one go. And when FIs close out and domestic investors also getting out, we have gone with the wind, we went with the flow. This time it's against the flow. Simple logic is investor is not only hardwired and learned very well. I personally felt the retail investors and maybe I being from the mutual fund industry, maybe mutual fund SIA has ingrained into the mind, and SIP has become a habit, it has become a DNA. That's where SIP book was growing even during the the gum time too during the year. There is no month we have seen SIP book is coming down. That's a true resilience which has come in. That's a regular flow. And when you come through the SIP book, for example, if I look at my 12 months SIP, it's as a short term in nature. If I look at my lump sum in January, I invested, and December I would have got 4.5% return. Whereas if I have my SIP, which has given reasonably much better than that 4.5, maybe 7 to 8%, my average return during the year. Means investors learned, it is a time when you need to not only diversify and make regular investments, don't look at market conditions, and you capture those opportunities which are available. That's where it shows this 13,000 crores of SIP AUM which is coming in. And going forward, I love this report which has come from the Morgan Stanley, which talks about if the last year, if it's the year of a resilience for us, and 2023 should be a year of patience for you. And if it is a year of patience, what you need to do is you need to design your 2023. How you design, that design is an acronym for me. I mean, have your D stands for debt. Accelerate, enhance your investments into the debt. Debt will definitely a better performing asset class. And the E comes on the equity. Maintain your asset allocation, and we look at your portfolio going there very rightly, and stick to your asset allocation with equity. And S is, continue your SIPs, never ever stop your SIPs. And the I stands for have your investment philosophy and have your investment advisor. G this year, I think, that one asset class can shine, could be the gold. Please do ensure that it's a part of your asset allocation. And N is never ever miss that natural loss of investment. And it's a stick to those laws. Don't go by the market trends. That way you can design 2023 with a design. And could be the multi-asset allocation, could be a strategy. One need to adapt. And it's like, that will help you to optimize the risk and have a proper diversification. I mean, I only said design 2023 with your design.
That's very nice, Mr. Rao. So in fact, you were talking about debt and this changing strategy that investors should look at multiple assets. But coming to interest rates and inflation that Mr. Trivedi was also talking about, experts say that there might be another, at least one more round of interest rate hikes, and after that maybe there'll be stagnancy or some amount of cooling off. So given that context in mind, given that basically view on interest rates going forward, what should be investors' strategy, Mr. Trivedi?
Yeah, so that's an interesting point because when you quote experts suggesting something, the first thing that I'll do is I'll take it with a pinch of salt, the expert's opinion, and no disregard for anybody's expertise. They are actually offering a well-considered, well-educated opinion of theirs, but that's an opinion, which means you can't completely shift your investment strategy based on these opinions, is point number one. How many of them could predict that there could be 3 hikes in 2022? In the beginning of 2022, nobody could predict that. So now why should I believe them that in 2023, if they talk about cooling it off, whether it will happen or not? And once again, I'm saying with due respect to all of them, and they are far more intelligent and educated as compared to people like me. But that's an educated guess at the end of the day. The world, the life, these markets are so unpredictable that something can happen. And if such is the case, can I really tweak my investment strategy, which is prepared to meet my life's goals based on short-term tweaks in the market? The answer is no, please don't do that. Once again, one would go back to the basics and say, identify your goals, your current situation, your requirements, and goals should include your immediate term goal, medium term goal, long-term goals. And then based on that, in order to achieve those goals, plan your investments. Now, with that, for your long-term investment or your investments made for your long-term goals, within that, if you want to tweak a little bit, which is also called tactical asset allocation moves, that's okay. But that tactical should be maybe 15-20% of your portfolio, not more than that. Keep that 80-85% of your portfolio aligned to your goals at all points in time. Don't really try to do too much. And that 15-20% that tweaking that you do, that is where you are taking an additional degree of risk, and that risk happens to be about relying on your own opinion and your own views, which is also based on somebody else's opinion. So when you are taking that risk, if it plays out well, then you get that extra couple of percentage points. If it doesn't play out, then you lose those couple of percentage points. And if that's the case, you play it accordingly. And that means if I'm a conservative investor, I should not take those tactical calls. Only if I'm an aggressive and learned investor, then only I should go for that tactical calls. I'm saying learned investor, but I'll add one more point: with the help of a professional. If you are doing it alone, then again the risk goes up to that extent. So my portfolio would not change in line with the expected changes in interest rates. Personally, I believe that it's difficult to predict. Having said that, as Rao sir was mentioning, overall, if I look at the interest rates where they are compared to last couple of years, then simply because the interest rates have gone up, debt as an asset class offers a better opportunity. If I was earning 6% earlier and now there's an opportunity to earn 8%, obviously that's a better opportunity. So I would rather tweak a little bit simply because with lower risk, I am able to earn slightly more. That's about it. I'll not do anything else in the portfolio.
Right, right. So that is a very important point about, suitability of assets to an individual's needs.
Yeah.
So it's not just your needs, your goals, even your risk appetite, like Mr. Trivedi rightly put it. There will be changes, factors that will change the market, interest rates, other things. But within that context, it is so important to have a clear focus on what you really need, what an individual really needs is. That's why, like planners say that, a lot of tactical allocation also may differ from person to person, depending on their needs and suitability. So Mr. Trivedi had a very, very important point there. And so coming from that, Mr. Rao, so we have seen so many learnings from 2022. So coming to the discussion on, the resolutions for 2023. So based on some of those, which one do you think stand out and which one do you think have some meaning that can be kind of translated into better goals, better resolutions for 2023, according to you?
Yeah, thanks, Nidhi, once again. I mean, Amit always drives us to the point, whether it's now the tactical allocation or it's like I also add to what he said on the tactical allocation. Sometimes tactical allocation doesn't mean that you need to be greedy and get into the business. The tactical allocation this year could be for someone. Even, I was just looking at two of my savings bank accounts are with higher balances. And earlier I was not much bothered to move that to the liquid funds because my savings bank account and liquid fund is giving the same return. And then I thought it's like, now my liquid fund is giving double the return of savings bank account. Then there is no meaning to keep my money in the savings bank account, and I started moving to my liquid account soon. That could be a simple tactical allocation, which can be guaranteedly making me at least double the returns what I am getting at my savings bank account. I mean, keeping that aside and coming to your question on the reflections and resolutions, and probably, last year also we did these kind of sessions of the reflections and resolutions. Probably whenever we are reflecting, that reflecting not for the year, but it can be our lifetime learnings. And that will pave the way. Our resolutions not just stands for the new year resolution, but with I mean, you rightly put it, it is a resolutions for the entire year. I mean, we go forward. And I also recall, I mean, this is my boss Bala always says, I mean, people, we have hardwired to think what negative can happen. Why should not we think what positives can happen? I mean, one reflection was last year, COVID is going to end in February and we had all the celebrations. That is the time COVID is taking the back seat and Russia and Ukraine war took the front seat. And, that has put it to be a negative and negative. But this year, there could be a situation. I mean, we talk many a times about the black swan events, which we are seeing it. And this time they say, no, the good sign can be a bluebird event. bluebird, it's there could be a peace between the Ukraine and the China, Russia, and then it can end. I mean, then your resolutions can be, I mean, you need to be a little more optimistic to look at the worst is, get off. At the same time, one need to be cautious because the year ahead, which is coming to be the year of elections, you can't overboard on things. Be ready, be prepared for it. I mean, then if I can broadly look at the learnings, I mean, it's always we say world can change in a week. Are you prepared for it? Or like, emergencies come any point of the time. Are you ready for it? And then, how you can get ready. I mean, ensure that your resolutions never ever break from your emergency fund. I mean, as I said earlier, great resignations to the great terminations. And if you have emergency fund, then it will safeguard you definitely. And there is another way to look at is if I can look at in the last 2 to 3 years when we are looking at things are very tough, and tough times are always given for the better days ahead. Probably if it is a bit tough time, then you can look for the better days. Then ensure your rest allocation very appropriately. Then you can look at it. And earlier when Amit was talking about you can't predict and you need to prepare. And for this prediction is not possible, but preparation for every one of us possible, depending on the situation each one of us. And how you are preparing for it. You want to consolidate. If I'm comfortable, I'm accumulating more equity. If I'm not very comfortable, I'm putting only my emergency fund, then I can look at it. And another resolution one can is always focus on your goals and stick to your goals. Things will change year after year, but your goals should not change much, except for your allocations, and then stick there. And then there is a natural loss of investment is your rest allocation. I mean, your resolution should always be, I mean, however tactical you are, you need to be focus on your rest allocation and look at. And the other one I can say is just clean up all your bank accounts. What kind of money you have lying in how many SB accounts? Try to earn that extra 2%, 3% pushing into the liquid funds. See, the year is going to be another year of debts and liquids, and that can give you any kind of time. And always it's wiser, apart from your investments, you need to ensure how best you can reduce your debt, because the interest cost you are paying on the debt is going to be much, much higher. And how you can look at that could be the one. And don't forget to take care of health, at the same time health insurance.
Of course. So debt is that key word that Mr. Rao has talked about. So not is it the year of debt ahead in terms of investing, but it is very important to stay away from debt. So that's very interesting. And another important point that is highlighted is about tough times. So what I want to add to that is that, tough times is something that should prepare you for times ahead. So in a way that can also be seen as an opportunity. But coming to financial resolutions, it's become very common, almost fashionable to make financial resolutions apart from other resolutions. But often we see that they are as easily forgotten or broken. So what can one really do about that, Mr. Trivedi? Mr. Rao, of course, said that, that's why the resolutions should be with a long-term view. But what can, general investors, what can be their strategy to kind of keep their resolutions?
This is a fantastic question. And to answer this question, let me remember a great saint, Swami Vivekananda, whose birth anniversary is on 12th January. So it's great to remember him. And he had said the human mind is like a monkey which just drunk alcohol, and then it is stung by a scorpion. Okay, so that's the definition of a human mind, which means it keeps jumping from one branch of the tree to the other. And exactly the same thing happens. We keep jumping from one resolution to the other, or one temptation to the other. Now, if that's the case, it's first of all important to understand and accept that that's the nature of the mind. And in order to control that, beast, what are the things that can be done? So first of all, even if you make bold, lofty resolutions, break them down into small, actionable steps which are easy to do. If you make the mind do tough things, it will not do it. It will not start. So there's always the starting trouble. Make it easy and convenient to do. That's number one. Number two, create a reward system. So, at some point in time, I used to do that. If I achieve a certain task, then I reward myself in some way. So let's say I would indulge in something. I would go and watch a movie. So it's sort of a reward. So you are rewarding yourself to behave in the right manner. So that's number two. But the third and more important thing is, at the end of the day, all of us have one question in mind: what is in it for me? Now, that what is in it for me is where Rouse's idea of starting with the goal becomes very, very important. And my friend Gaurav Mashruwala always says that sit with the family, write down the goals, if possible, convert those goals into pictures, photos, or whatever, and then take a printout along with the photo of the family and stick it on the refrigerator or the prominent wall of the house where it's visible to everybody on a day-to-day basis. It works wonderfully well that now your mind is focused on those goals because those goals are visible on a day-to-day basis. You can't miss those. And then every spending decision that you take, every investment decision that you take, you remember those goals. Am I moving towards those goals by taking this action or not? So then automatically all the resolutions would be aligned to the goals, and those there's a very, very high probability that the resolution that you've broken down into small steps, you will eventually go towards those goals. So these are the three things that I would strongly recommend. But after that, there's still some degree of uncertainty. Reduce that uncertainty by hiring a competent advisor, a mutual fund distributor. Even a Virat Kohli needs a coach. Even a Surya Kumar Yadav needs a coach. And even a Lionel Messi has a coach. The greatest of the people need the coach, not because the coach knows that their sport better, but because the coach ensures that the player stays focused on the goal, and that goal is to excel in the sport. In our case, the goal is to achieve the family's financial goals. And that's where a good coach, call it an advisor, mutual fund distributor, whatever capacity you are hiring somebody's services, take that help. They ensure that that monkey mind doesn't keep jumping from one branch to the other and makes an abode at one place, and that's the resolution.
Right. Of course, it is a lot about your inner strength, but I think what the strength can be, drawn from the fact when you put these goals in front of you, whether it's related to your family or yourself, and suddenly everything will come into focus. That's the key. And of course, a coach or a financial advisor, like Mr. Trivedi put it, even a Messi needs a coach. And that is a very important and very interesting point to say, because a lot of people say, I know markets, I know how to invest, I don't need anyone, I can do it on my own. Well, you can, but perhaps you just need a third person's view to kind of do it right and be on the path. So coming to the end of this session, so your last words, gentlemen, on reflections for 2023.
Thanks, Nidhi. I think I'll take from the coach and Messi. Probably, Messi needs a coach. But if you do not have a coach, then your investments will become messy. Then choice is with you, and that could be the investment strategy. And since we started with a Kabhi Kushi Kabhi Gum, probably I'll take the strategy for this year could be on an investment asset classes side. Probably the famous Bollywood dialogue is "Mere paas maa hai," and the maa is multi-asset allocation strategy. And that could be the way MA we can look at that way, and stick to your basics. And if the last year VCs were jumping here and there and putting a lot of investments, that VC definition for 2023 has undergone change. Now they say VC is not venture capital but value cash. Probably investors also can look at, you value cash and stay put there, and don't venture too much into investments where you do not understand. We have seen the cryptos of the world, how that has been paid. People have paid the price. And last but not the least, stick to your goals, stick to your asset allocations, and stay calm. And the markets may become much more volatile. Continue with your investment focus and strategy. And definitely, India is insulated. I was reading your article on last month in December, you said looking back and looking forward, where you bet, why India is insulated. I think that way we continue to be there and be optimistic. At the same time, exercise the caution when you are taking with a greed of investments, and when you are tactical on your equity allocations. And and have with your advisor, wishing every investor a wonderful 2023, and hopefully, all of us can next year when we are looking at 2023 reflections, our investments have reasonably done well, better than the inflation, because higher interest rate, higher inflation, it is a time you need to look at a strategy very differently.
Yeah, your thoughts, Mr. Trivedi?
So I started with talking about some of the negatives of 2022, and that's when I said, okay, when the times are good, you need to also think that this too shall pass. But at the same time, now let me just turn it around and remember another great son of India, Gurudev Rabindranath Tagore, and he said, hope is that bird that sings even when the dawn is dark. So even when everything looks dark, everything looks gloomy, because that's where, as you mentioned some time back, that people are talking about global recession. Well, I'm not ruling it out. It can happen. I don't even know whether it will happen, it will not happen, when it will happen, when it will not happen. I don't know that. But keep that hope alive, because eventually, if I reflect back on the last 3 years, 2020, 21, and 22, I think all of us together have gone through an extremely difficult time, and we've survived. So somehow I think today a lot of philosophy comes to mind, but the German philosopher Nietzsche said that whatever doesn't kill you makes you stronger. So we've actually emerged stronger out of this entire period. And if that's the case, keep that hope alive. Don't give up. We are all going to swim together, or we are going to sink together. And I have a faith in the human ability to swim through any ocean. So keep that hope alive is what I would start with. Having said that, stay grounded. Don't lose that eye from the possibilities. And that again takes us back to the discussion, prepare. And then that prepare, if you have not yet taken your health insurance and life insurance, please go ahead and take it. If you not built that contingency fund because simply you feel that my job is great, my business is great, understand that one particular service, and let me just, this is something that a friend mentioned yesterday. In 2020, one of the professions suffered in a very, very negative manner. We thought that there cannot be a recession in haircutting salons. And for around 8-10 months, nobody went to haircutting salons. So a business that looks like evergreen also had that time. So never lose that sight. And if that's the case, keep your emergency fund. Last year, we saw a slew of terminations and we saw a slew of resignations. Keep that. And Nidhi, you've been highlighting this fact multiple times that even when your employer is providing health insurance, you got to have your own policy separately.
Right.
Keep that.
Absolutely.
And that basic buffer or basic safety net is the starting point. If you got that, then your foundation is strong. Now, on that strong foundation, then build your palace. And wish you all a very, very happy 2023. Thank you.
Right. So life is a series of ups and downs, like kabhi khushi, kabhi gum, and so are the markets and your investing life as well. So what you need to do is strike a balance, stick to some basics like our experts highlighted, and that will see you through to a very happy new year. So on that note, signing off, and thank you so much, gentlemen.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.